Hello, how's it going? This is Rob Reinhold, and we are here in Relative Strength, and we are going to be talking about candlesticks. All right, candlesticks are one of my favorite things to talk about. I absolutely love them, and I'm so happy to be sharing them with you. Now, based on your experience, you may have a lot of experience with candlestick charts. You may be new, but I promise you, whether you're experienced or not, what I'm going to go through is just so crystal clear, and it's so simple. So let's jump into it. The first thing we need to talk about, the only way for a currency or really any financial asset to go up in value is if there are more buyers and sellers. Period. Now, what happens is people take this and they make it so complicated, so complex. And it's not, it's simple. Now look, when I say it's simple, that doesn't mean it's easy, but it's simple. Literally, the only way something can go up in value is if there's more people that want to buy it than sell it. That is the financial marketplace, and we call it a marketplace because it's an auction marketplace. The only way for there to be any movement in any prices is if there is an imbalance in supply and demand. The only way a currency can go down is when there's more people selling than buying. If that doesn't exist, the currency won't go down. It's just how it works. So this is just, again, a simple thing. And people make trading very complicated, which it is. But in the end, this is what actually moves things. So before we jump into candlesticks, I need to introduce you to my nephew. Now, my nephew Hyatt, he is awesome. And he is a big sports fan. His family is. Now, you can see here in the picture, he is clutching his Cam Newton backpack on his way to school. Hyatt loved the Panthers when they were making their run for their Super Bowl. Now, Hyatt is the greatest bandwagoner. If you don't know what a bandwagoner is someone who jumps on the trend only when it's popular. So the Panthers went all the way to the Super Bowl, and they lost in the Super Bowl, and Hyatt took off his Cam Newton jersey and never wore it again. Literally never wore it again. He asked for a Peyton Manning jersey because the Denver Broncos won the Super Bowl that year. Now, every year, Hyatt loves the best team. And as long as they win, he's happy and he's the biggest fan. As soon as they lose, it's done and he's on to the next hottest thing. Now, look, I use this example because this is exactly how we want to be in trading. We want to be bandwagoners because, remember, the only way something can go up is if there's more people buying it than selling it. Period. Look, I don't care if the news is terrible out there on whatever is the currency. If there's more people buying than selling, it will go up. We want to be bandwagoners just like Hyatt. Now, this is where I am not built that way. I'm actually the opposite of that. When something becomes popular that I liked, now I don't like it as much. If everyone's rooting for one team, I'm going to be rooting for the other. That caused me a lot of trouble in trading in the beginning because I didn't want to be like all the other idiots that were buying for no reason. I didn't want to be the people that were chasing things. And so I took the other side, and that hurt me for a while. Counter trend trading hurt me until I learned, okay, I don't want to counter trend trade, but I couldn't quite buy into when things were running. I fully now embrace Hyatt's philosophy of be a bandwagoner. So let's jump into the charts. So here we have a bar chart. Now the bar chart is the basis of a candlestick chart, and a bar chart is made up of 4 points. So if you're asking for a daily chart, it will show you 4 parts of that day. If you're asking for an hourly chart, each hour will have one of these bars, and it's going to be giving you the open, the low, the high, and the close. So as you can see here, it's also called an OHLC candle, open, low, high, close. It tells you that the currency opened up at this level. At one point, it was down to this low. It ran all the way to this high and then backed off to this close. So you can see we have a bar chart here showing you exactly how the S&P moved during this period. If it was a down period, then you're going to get the same thing. You're going to get the open, the low, the high, and the close. So this currency opened up, or the SPX opened up here. It went up to this high, came all the way down to the low, went to the close. It doesn't tell us a story of what happened in between all those, but we can know that, okay, it tells us that this was a down day. Why? Because the price closed lower than the open. And remember, what is the only way that can happen? If there was more sellers than buyers during that period. That's what it's telling you. There was more sellers or buyers during that period. When we take a look at a candlestick chart, we're basically taking the open and close, building a body around it, and filling it in with the color. As you can see here, the green candles are up candles. It's the same information. Open, high, low, close. And you can see that these have wicks on them. Now, these wicks are kind of important. We're going to be talking about those later. But you can just take a look at this candle right here and say, well, this is the open, this is the close. I know for a fact that there was more buyers than sellers. There was a supply and demand imbalance with more buyers than sellers. How do we know that? Because the price went up. As I said, it's simple. It's simple. Let's take a look at a red candle. It's just the opposite here. We have the open, we have the low, we have the high, we have the close. So this is how candlestick charts work. And I absolutely love candlestick charts because they tell you everything. They tell you so much if you can just learn how to read them correctly. I want to introduce you to Steve Nissen. Steve Nissen is the father of candlestick charting. He has many books. I recommend all of his books, but specifically his first one, Japanese Candlestick Charting Techniques. When I was a new trader and I found out about candles and I really wanted to get into it and I learned about who Steve Nissen was, I thought to myself, you know what? I am going to buy this book. Now, this was back in the late 90s. And again, online shopping was just barely a thing. So I found this website and this book was $350. It was a hardback book. And I thought to myself, oh my gosh, like that is crazy. I'm not spending that. And then I decided, you know what? I'm willing to invest money in this business to make it work. And so I bought it and it was shipped to me. And this book was huge. This book was like, I don't know if you've seen one of those huge like art books, the hardback books. Anyway, the thing weighed about 20 pounds. And inside this book were over 700 Japanese candlestick patterns. And I looked at it. It was amazing. And then I realized, I think I may have wasted $350. No, I didn't waste it. But what I meant is there's no way for me to learn 700 candlestick patterns. And so I wanted to throw this at you. There's a lot of information out there. What you need to do is you need to learn exactly how candles work, why they work. There are names for all these. Every single candlestick has a name. Every single pattern has a name. You don't really need to know that. You don't need to know the name to know what is happening. So that's what we're going to go through here. And then I'm going to send you to a couple websites to do a little bit further study. And if you want to learn some names, great. If not, you'll know exactly how that works. So let's take a look at what these candlesticks do. They're going to show you what's called continuation. You're going to hear this all the time when you hear us on the weekends talking about the currency room and currencies. We say either reversal or confirmation. What that means is that prices are going in a certain direction called the trend. And as long as the prices are going that direction, and remember, it's only a trend because there's a supply and demand imbalance. The question is that trend going to continue or is it going to reverse? Reversal or continuation? The candles are going to show you whether it's highly likely it reverses or continues. So we're going to be able to see both. And the candles are going to tell you, hey, this is likely coming, or hey, we're likely to see a continuation. And it is absolutely a visual representation of supply and demand. So I'm going to just run a little chart simulation here of candles going. And I just want you to watch them. But we're going to go through how they work. And I'm going to show this to you again. And you're going to see that it's completely different when you have a different perspective. Let's start off with the market. As I said earlier, the market is simply a marketplace. And just like everything, there's buyers and sellers. And the more buyers there are, and the less supply there is, prices are going to go up. The more supply there is, and the less buyers there are, prices are going to go down. Now, as you can see here in the middle, I have these balance scales. And when I learned about these candlestick charts, I always held in my mind these balance scales. And if you put more on one side, then it moves. It moves, and as long as there's a supply and demand imbalance, it moves. And then when it shifts the other way, again, these balance scales moved. And I remember early on, I actually wanted to have this as a representation in my office. So I actually went out and bought some on eBay, some cheap ones, and they were in my office for years. And then a couple years ago, I decided, I'm going to get a really nice antique set of these, because this is such an important thing to remember as a trader, is that when these scales move, they move. When it goes from more buyers and sellers or more sellers and buyers, it moves. And candlestick charts is simply looking at these balance scales. So I went out and I bought a nicer set. I know that is like the sickest brag ever, right? I bought some nice balance scales. Yeah, not too impressive. But look, here they are. They're on my office. It's something that I want you to at least have in your mind. If you don't want to go out and spend they're probably $30-$40 online, at least have this in your mind that this is how they work. So let's go through what a candle can look like. Now, these are bullish candles. The first one is the least bullish. Now, let's take a look at exactly what this is saying here. The open was down here. Now, look, there is no wick whatsoever. So this was the low. So it opened and it ran all the way up to this point. This was the high. And then went all the way back down and basically closed right above where it opened. So this was an up day, but you can see here, at the end of the day, there wasn't a crazy supply and demand imbalance. Any buying at the first of the candle simply went away by the end of the candle. Let's take a look at this neutral bullish here. We have the open. It went all the way down to this low, went all the way up to this high, and then came back down and closed slightly higher than it opened. So you can see here, this is pretty neutral. This is an equilibrium of supply and demand. In the end, there was a little bit more buyers than sellers, but not much. Let's take a look at what a bullish candle looks like. We've got the open, we've got the low, we've got the high, and we've got the close. So during this period here, we saw that there was substantial buying and selling imbalances. And let's take a look at this wildly bullish one, and this is what we love to see. Here's the open. The open and the low are the same. The high and the close are the same. So what this means is that during this period, there was a supply and demand imbalance. It opened up and it went up and it went up and up. Look, it might have backed up here, came down, but then it closed at the end of the candle. So what that means is at the end of the candle, there was a really strong supply and demand imbalance. So what do you think the next candle is going to start as? You're right. It's already there. It proved to you that there was a huge supply and demand imbalance. At the end of the candle, the next candle, at least the first part of the candle, is very likely to be strong. Let's take a look at the bearish candles. Here's the open. Here's the high. Here's the low. But then again, it came back. So at the end of the day, or whatever the period is, there was actually more buyers than sellers at the end because it rebounded quite a bit off the bottom. Let's take a look at this neutral one. We've got the open, we've got the high, we've got the low, we got the close. Same thing here. We had a movement strength at one point, weakness at one point, came back up. Again, we don't get to see what happens inside, but what we know is, we know that during this period, there was an equilibrium. At some point, there was, again, more buyers than sellers, more sellers than buyers, but in the end, it closed right about where it opened. That's fairly neutral. Then we have a bearish one. We've got the open, we've got the high, we've got the low, and we've got the close. So as you can see here, much more weakness than strength. Even though there's little periods that we had a little run up and a little bit run down, but in the end, this is a weak candle. And the one we love to see the most, we've got the open, which is the high, we've got the low, which is the close. This is screaming to us at the end of this candle, there is still more sellers than buyers. The next candle is likely to be red. And the more intense that supply and demand is, the more red it's likely to be. So as you can see here, this is telling us first of all, what happened during the candle, but also where the supply and demand picture was at the end of the period, giving us really good insight to at least where the first part of the candle is going to go. So let's take a look at reversals. Reversals, or we call them consolidation candles. And we're going to get into where these occur in the chart is very important. But these are consolidation candles. It tells you that there is a balance of supply and demand. So we've got this first one is called the doji, where we basically have equal highs, equal lows, and then we close in the middle. We've got this long lower shadow. Now these can have names like hanging man, shooting star. Again, they're all based on where they fit in the chart. They have a different name, but look, you don't need to know the name. What you need to understand is it opened up, it came down, it ran all the way up and backed off. This is more of a bullish candle. As you can see here, that at the very low, a lot of buyers came in, and we actually closed up on this candle. At one point was really negative. This is the opposite. This can be called a gravestone doji. There again, there's different names for it. Again, open, high, low, close. So you can see at one point it's strong, and then it fell apart and would close much lower for the period. Again, telling us kind of where it ended up. Where did it end up? And then we see something like this. This is just a clear sign of, hey, no one's really taking any shots at this. There is no trend. We opened up, we had very low lows, very low highs, and the close is pretty much the same. Telling us, hey, there's not an imbalance right now on this currency. So let's take a look at how these things are going to move. Now we need to identify what exactly a pivot point is, because again, these balance scales, remember, as long as these balance scales are unbalanced, if there's more buyers and sellers, then the price is going to move. So let's take an up move. So let's say that we get 3 candles to the upside. Now again, a pivot point needs to be made up of 5 candles minimum. We need to have the 3 candles before the pivot point, and they need to be in the same direction. So as you can see here, we've got 3 very strong candles, a clear supply and demand imbalance. Now look, so again, have in your mind that these balance scales are unbalanced. And as long as they stay unbalanced, they're going to continue to go. But we know it's not going to go forever. At some point, there is going to be a change. We are going to see that in the charts. So as you can see here, we get what's called a reversal candle. So in the first part of the candle, we have the open. And you can see that we ran up, got all the way to this point. It looked at one point like it was going to be just like the other 3 candles. And then we came back down. And at the end of this candle, you can see that the momentum to the upside could be done. It could be. It ran up and it looked all great at one point, but then at the end of the period, there's actually more sellers than buyers. Now, every single reversal candle needs a confirmation, because a reversal candle says, uh-oh, look out, watch out, it might be over. What we need to see is the confirmation that says it is over. And I want you to watch those balance scales. They've shifted. At this point, it has shifted to where there are now more sellers than buyers. This confirmation candle, we'll get into exactly how these things work and what they look like. But basically, we need a red candle. We need a red candle to say that there is now more sellers than buyers. So take a look at how this works. The balance scales, as long as there's more buyers and sellers, it goes up and it goes up and it goes up. At some point, that'll end. We're going to get a reversal candle. This one was called a shooting star. So we get that movement and we get the confirmation candle. The balance scales are now unbalanced the other way. And as long as they stay unbalanced, the price is going to go down and down and down. And as long as they're unbalanced, it keeps going. At some point, those balance scales are going to come back. They're going to come back to a certain point. So let's take a look at some of these reversal candles. These are some of the names. Again, I would love for you to go out and learn more about this, learn the names. It's awesome. It's wonderful. But I don't care if you know the names, because you just need to know what they mean. So let's talk about a reversal candle of a doji. Now, this is a very common one. And if you see that there were 3 up days going into this, so let's say there's 3 up days going into this, and then you get a doji. What that's telling you is, okay, the 3 days prior, there was a clear supply and demand imbalance. The 4th day, there wasn't. It was actually a balance. So think about the balance scales. Think about them being unbalanced. And I wish you could see my hands here because I've got my hands out like balance scales. They were unbalanced with one hand higher than the other. When it gets up to the doji, what happens is the balance scales are now equal. They're now equal. And if you get a red candle, a down candle the next day, that doji was simply the middle point between the scales going one way, it got to the middle point, and now it's gone the other way. These dojis are great little symbols that there is a reversal coming. We've got the hammer candle. As you can see, same thing. These are going to be on the downside, so you've got 3 down days going into it. You got 3 down days going into the hammer candle. You have another day at one point, it looks like it's going to be another disaster of the period. And then by the end of it, it rebounds up, and it tells you at the end of that period, there's actually more buyers and sellers. If you get the next candle is a green candle, again, the balance scales have shifted. It's a confirmation that the balance scales have actually shifted. Again, shooting stars is the same thing on the other side. Again, running up to it, you get the shooting star, you need the confirmation for the down. The engulfing is a massive move. So what you see is like 3 candles coming down, 3 candles coming down, and then all of a sudden you get this move lower, and then boom, an explosive move to where you get a close that's higher than the previous candle. This is an engulfing candle. This is another very powerful message that, hey, supply and demand dramatically changed during that candle. There are many, many patterns. And as I said, I'm going to be sending you out to do a little bit of your own research. Steve Nissen is a great one. I'm going to give you another one. These pioneers have put together patterns that have happened regularly and been back tested over time. Like I said, there was 700 back in the 90s. There's probably more now. It's too overwhelming to learn them all, but there's some that are definitely you want to take a look at. Here's where reversal candles really make sense. After a run, let's say we have a currency that runs from $1.10 up to $1.12. That's a big move. That's a 2% move. We're likely to see a reversal. That would be no surprise. It's the same thing if a stock runs from $100 to $120 a share. You would expect at some point it would take a breather. So this is where reversal candles, you need to be looking for them. Okay, we just had a run, which we see a reversal candle at some point. Also, it's support and resistance. If there is a currency that every time it runs up to 120, it hits its head and comes back down, once it gets to 120, we'll likely see a reversal candle. That's going to tell you, hey, it's probably going to hit resistance again and come back down. And then if it has support at like 115, it comes at the 115, we should see reversal candle. We should see the supply and demand imbalance actually change. And remember, those confirmation candles are everything. And I'm going to drill that through you again. A reversal candle is not a reversal candle until you get the confirmation. Let's get into exactly what a confirmation candle is and how to measure it. All right. So let's take a look at just this move here. We have this clear move lower. There's a supply and demand imbalance. Sorry for my drawing of balance scales, but we have more selling than buying during this move lower. Every day it's pretty clear, but then look, we're starting to slow the descent. And down here we get the doji. Now at this point, these balance scales have gone to, that is a terrible drawing, equal. At this point, they've shifted equal. Now look, we don't know if that's just a pause and then it's going to fall again. So we have to wait. We have to wait for the reversal candle confirmation. So here are the kind of the rules here. We need to see a close above the reversal candle high. So here was the high of the reversal candle right at this point. What that says is that's the highest price that someone was willing to pay for that period. The confirmation candle needs to close above that point. It's saying, hey, the highest price of this candle is higher than the highest price of the last candle. That's kind of the definition of it's going up. And going up is the definition of there's more buyers than sellers. So we need to see a clear change of direction. And we need to see that, hey, at the close of this period, it was higher than the period before, which is, again, the definition of more buyers than sellers. The only way a price can be higher than it was as the previous candle was if there's more buyers than sellers in this candle. Hopefully you can get the logic behind that. So let's take a look at just a movement. Here is Bitcoin against the dollar, and you'll see that we have some movements here. So the first one down, we had this move lower. You could see engulfing candle. The next candle, the buyers were still there. Now again, it wasn't super strong, but it fit the confirmation. Here's a reversal candle, fit the confirmation. You can see it ends up in a big run. Now, as this thing's running, you would expect at some point there's going to be a reversal. And here we got this reversal candle. We got this reversal candle. So anyone who really knows about candlestick charts will say, okay, well, that run is probably over. But the reason why we don't just jump out on the reversal candle is that sometimes it's just a pause. We wait for the confirmation. You can see there's no confirmation. There's no confirmation whatsoever. We get a red candle here. We say, okay, well, do we know that it's changed? Well, the confirmation candle says, yes, that is when it is currently changed. As you can see, we get 4 down days. At some point, the supply and demand balance scales are going to flip. They're going to change. And at some point, we're going to know that. But again, we're going to get a reversal, and then we're going to get a confirmation. And that tells us, oh, it is now shifted to where there are now more buyers than sellers. Great. We'll let that run. And then all of a sudden, we get a possible reversal. We say, hey, we're not just going to jump out on it. Let's wait till we get confirmation. No confirmation. No confirmation. So you can see we finally get the next one. We get moved down. We get a big engulfing candle, but there was no confirmation behind it. So you would say, okay, I'm not going to go long that one. This drifts down. We get our reversal candle. We get our confirmation. Then we say, oh, okay, this one we can jump into. All right. Hopefully, just for the last 20 minutes we've been together, hopefully you can now see the story in your head. Kind of see what's going on and understand, oh, these candlesticks literally show you. Going back to just some of these candles, I mean, this candle right here is such a great candle telling you the continuation is highly likely. Why? Because we closed at the high of the candle. There were still more buyers than sellers. This big one here says, we could be in a little bit of trouble. That might have changed. That's why we wait for the confirmation. It was down a little bit more, and then it closed up at the high of the day. Highly likely to have another green candle the next day. It's telling you all of these things. So I've told you about Steve Nissen. Let me introduce you to Thomas Bulkowski. Thomas Bulkowski this guy is all about data. If you're a left-brainer, you're going to love this website. Now, let me warn you, this is literally what the website looks like. He made it probably in like 2001, 2002. He is, to this day, maybe it's updated by now, but since I'm making this video here, it has not been updated. And so it is maybe the worst looking website out there, but the data is awesome. He's been updating it constantly with new data. He just hasn't made the new website because he probably just doesn't care. So go to thepatternSite.com. And in this one, he ranks them. And I want to just show you what Bulkowski has done. So this here is a bearish engulfing candle. Now, we've talked enough about you should know what this means here. We have a move higher. We get a big reversal candle on the downside. So he goes through, he gives what's called a frequency rank, a performance rank. He tells you this is the best percentage, meaning the price target. He breaks it all down and basically says, this is how likely it is to happen. This is how accurate it is. And this is what you want to be looking for. It's amazing how he's broken this down. He hasn't presented it in a updated manner, but the data is there and it's awesome. So I highly, highly recommend jump onto this website and go and look through some of his patterns and just learn a few. Learn a few and become really good at a few. And then go out into the markets and either go back test and do this yourself, or just watch the market in general. And you're going to start to see that these patterns happen all over the time and they can give you a really nice edge. So I'm going to run a candlestick chart again. And I just want you to watch it now, thinking about those balance scales and see if you have a better idea and understanding what is truly going on in the price action. I'm hoping in your mind you saw those balance scales. You saw those balance scales move. And when they moved, and then we get these, again, these signs that there's a reversal coming here. And we get the confirmation, and then it runs up, and then we get this big engulfing, and then the buyers came right back in. So this was really the move. And we don't want to get tricked out with just this little one period candle that just had maybe some news came out, something happened. But then we get the reversal up here. We get the movement down. We get our first sign that, hey, things could be turning around. Well, the next candle did not confirm. It actually did turn around. And then we got our confirmation candle from there. I hope you look at candles differently from this point on and you see what I see, the balance scales. All right, let's review. First thing I want you to remember, be like Hyatt. The only way that things move up and down is by supply and demand. That's it. Understand that, and then you'll always be on the right side. Learn the candlestick names and patterns. There's a few of them. We're going to be using them in classes, so you're going to want to learn them. Doji, shooting star, things like that. It's not all that difficult to learn. Go out to those websites I showed you. Just bump around a little bit. You'll get them very quickly. And remember, there's two candles that we really want to be interested in. Continuation candles that show the price is likely to continue to move in the direction. Reversal candles where we're likely to see a reversal in prices. All right, thanks for joining for Candlesticks. I love this stuff. Goodbye.